First of all, welcome everybody. We have a couple sponsors too. I don't think my friends from CUSN will be here today, but Dante's here from CU Ledger, so we'll talk a little bit about that as we always do. Brett, can you see my screen? Is it loaded? Do you see CU Digital Town Hall?
I see
All right.
it.
So we're going to move through here. I'm not sure if Mike Lawson's with us today. Mike, you here? He'll probably pop on.
That's a shame. I like Mike.
Sure.
I've done a
Yeah.
ton of stuff with Mike over the years. So
Oh
good
yeah,
to see him.
and Mike is kind of the backup host. Kind of just we worked on this together, so Mike is here sometimes.
Hey, Mike. I see the
there's-
picture.
Yeah,
How
he'll
are
be
you,
here in a
man?
minute. He might be muted. He can unmute himself.
I'll unmute myself. There we go.
Hey,
Yeah, there you go.
Hey, good to see you.
it's been a while, man.
It has been a couple of decades, but we're all right.
Haven't got
All
entirely
right
in
is
there.
relative, really.
Yeah.
All right, so let me get this rolling again. You should be able to see my screen. All right, so we got a special guest today, a man who really knows his hair products and futurist, international best-selling author, sand host. That's a Dune reference, I believe. You're like a sandworm. The sand host of the Breaking Banks podcast. So for those of you that don't know Brett, he's a major contributor in the financial world, someone who's well-regarded, many books, one of which my favorite is Augmented, which was really a futuristic view of the world, and someone who I thought Mike could join us this week, and he was willing to do that. So we're definitely going to dig in and really kind of feature him on this particular town hall and get questions. So our usual format, a short briefing, which I'm doing. Melissa, when she gets on here, she will be the one that you talk to. If you want to kind of talk or come up, because of Zoom bombing, we want everyone to sign in on the chat. And so please make sure if you sign in and let us know who you are and who you're with. Sometimes we see some weird names that people have used, but we'd like to know what credit union. If you do not do that, we'll remove you because we don't want anything weird. If you feel compelled to dig deeper with another credit union, for example, or Brett or anyone, we encourage you to just go down to the chat, which we'll show in a minute, choose that person, and give them some information. If there's any information that you think a broader audience should know, so for example, rather than talking directly to someone, but you have a solution you'd like to tell everyone, just post that to the Everyone group. If something comes up that's worthy of a longer discussion, we've had a few of those, Mike will take that and move it over to CU Broadcast and interview you or a resource to talk about whatever it is that we think needs more featuring. Here's the chat. I think everybody's got this by now. It seems like all of a sudden the world are Zoom experts, but when we first started this, people were really confused by Zoom, and finding the chat was difficult for them, especially because the little bar down there hides from you. It's not there until you cursor over it. But for those of you that don't know, you can see where the chat is and how to use it. So it's a pretty simple solution. So let's talk a little bit about this. This is the start off here of Brett, I kind of wanted to dig into, the thing that is on everyone's mind. From my perspective, this virus is, the virus and the recession have some familiar or similar traits. They're both kind of grenades, right? You count to 3, then they blow up. What's based on what you're seeing, what are you preparing for? If you were in our shoes, what are you looking at?
Yeah, well, I'm not an economist, but I'm a futurist. That sounds like the start of a joke or something, but no, it sounds like a line that one of the Star Trek doctors would use.
Yeah. I'm a doctor, not a economist.
Yeah. But I think actually that this is going to be a much deeper economic contraction than most people are expecting. I think we could have a 25 to 30% contraction in the US economy by early next year. It could be lower than that, of course, depending on how successfully we mitigate the risks of coronavirus. But globally, if you think about things like the tourism industry has been decimated, there's a lot of changes here that we have to absorb, and the economic impact won't really be felt, until we're a couple of quarters in. So, in terms of settling that down. Now, people want to get back to work, And I think that's a normal a response. But of course, the risk is we just don't know enough about coronavirus and how it's going to respond as we start opening up the country as yet. And so the propensity for us to have secondary spikes that are as bad or even worse than the first is fairly high. In the countries where they've managed this fairly well, where they have strong differentiation from the US in respect to response, is very compliant social order. So you have Taiwan, South Korea, and so forth. When the government in Hong Kong, when they had their secondary spike after Hong Kong people started to return because the borders were going to be shut down. They didn't have to issue stay-at-home orders, but everyone stayed at home. Everyone wears a mask. Everyone is, all the major buildings you go to have people with temperature sensors checking if you have a fever. Every 15 minutes, the lift buttons are disinfected. It's really very disciplined and sort of orderly approach to this. But it also requires, as a central component, this social discipline from the community. And so we don't have that in the US. And so that's one of the things that's going to definitely work against us in respect to recovery. And so while I'm a little bearish on the nature of the recovery in the United States generally, but getting back to your question, the bigger change here is one of behaviors. We're starting to hear discussion about this now, but how will restaurants be organized? And as this comes back, and will that be permanent? Will we need greater floor space and have greater distancing between tables? Will we limit the number of people that can sit at a table? These are all things that we're still got to work out. As we start the recovery, that's it's those sort of behavioral shifts that I think have the potential to really become much more permanent. I would like to see people modifying their behavior on simple things like handshakes and so forth until we really know where this is at. There's, I don't know if you guys are familiar with in Thailand, they have a greeting which they call the Y, which is like, if you see someone, with a namaste sort of hand gesture, this is the Y in Thailand. And there's some historical evidence to suggest that came out of a very similar pandemic, back in the 1600s in Siam, in old Thailand, where people discontinued handshaking. And so, it could be, what I always say, John, to be a good futurist, you've got to be a good pastist. You've got to understand how people responded in the past. So I do think that there's going to be behavioral changes that will sort of get bed in over the next a couple of years out of an abundance of caution, particularly if we spike and we spike and go back to shutdown, we release, spike again, go back into shutdown. If we have this sort of W-based recovery, as economists typically call it, based on resurgence of the coronavirus, then this will force people to behave very differently. Right now, the biggest problem we've got is we've got so much disinformation and so much sort of guesswork in this. We don't know on a longitudinal basis how the coronavirus is going to change. We don't know how it's going to morph. We don't know if it's going to get stronger or weaker. We don't know if we're going to develop we call it, people have been calling it herd immunity, but it shouldn't be called a herd immunity because that's for animals. It should be called crowd immunity, right? So, we don't know whether we're going to develop that sort of crowd immunity and how long that will take. We don't even have adequate, antibody tests right now. Will we need antibody? Will we need to carry a coronavirus antibody card to travel internationally in the future, like we do with the yellow fever card when we travel through some Asian and African countries these days? That I think is fairly likely. Will contact tracing become sort of a global data initiative? We've seen localized contact tracing happening now. All of these things lead me to believe that the world that our children grow up in will have some very different behaviors from what we're used to. And so then that comes back to when you start thinking about things like our commitment to member service in credit unions, we really have to say, how are we going to respond to those changing behaviors? And one of the big changes, and this is not just for credit unions, of course, but for all of the financial institutions, is when we've looked at digitization, we've looked at two areas primarily: acquisition of customers and self-service capability to reduce the cost of servicing customers. What we haven't done is invest in engagement. We haven't invested in member experiences online that give the same sort of customer satisfaction that we've seen for member service in the branch, as an example. And so, that's part of the behavior that credit unions specifically need to enact, because credit unions' differentiation has always been this commitment to member service that hasn't had the same financial constraints that you have in the big banks, primarily because of the nature of the structure of credit unions. So, but we haven't really seen that. We don't have engagement models. So how do you engage with customers? It's not pushing out offers to them.
Yeah.
What's the number one thing we can be doing for members at credit unions after this? Right now, it's about getting them stimulus checks and maybe PPP payments and things like that, but PPP loans. But, if we look at the long tail of this, as people are coming out of coronavirus, they're going to be financially hurting. And so we could say, well, we could lend them more money, but there may be, constraints on how much of that we can do, from a risk model perspective and purely from a liquidity perspective. But what we can do is we can start to try and coach people. We try and give them the tools within the community to help them, particularly for CUs that are, have memberships based on employment groups and things like that. Like let's find where there are employment opportunities in those groups and act as a conduit for that sort of stuff. What could we do as member service organizations to help people get on their feet financially coming out of this? And offering a savings product is just not enough.
Yeah.
Anyway,
just to piggyback on that, I want to make sure, man, you said so much.
I know. Sorry.
No, I'm not upset by it. I just want to loop back a little bit.
It was just a stream of thought, but
I love the stream of thought. So the first thing that making less go, doing more with less. And so what I'm hearing you say is, what we always talk about, which is anticipation, right? Anticipation of what we're going to see coming up. So the idea that this downturn is going to change the ability of restaurants, the idea that we've already seen behavior changes. Jim Moroz has talked about this quite a bit. He's talked about 10 years of digital transition stuffed into 5 months.
Yeah, absolutely.
So what I'm hearing from you is that we've got to start thinking now that this recession is coming, because I feel like you're right. It has a long tail, but it's also been a little bit of a time bomb, right? Because people had some savings, then they got these stimulus checks. All of those things are just prolonging the inevitable in some extent, right?
Yeah.
And so if that's true, then, if people are working from home more, will they buy more cars?
Right.
So how do we adjust our auto? We started off 2020, everybody had a budget. They planned on doing this many car sales, but what is that really going to look like? And we don't know, right?
Yeah.
The next thing is the branches. So we're reopening these branches, but if less and less people come, and all of a sudden there are people who maybe used to go to a branch just because they tried the digital service once, it didn't work, but now they were forced to, they got it figured out, and now they're not going to come back.
Yeah.
So does that mean that we start to see those branches downturn? And I guess what I'm hearing you say is like this lull, this moment, besides the stimulus checks, is like the moment to start thinking about the products and services that people are going to need in a new normal.
Absolutely.
Right?
Yeah. I mean, I am also a little skeptical on, the medium or the short-term viability of branches. I think, one of the key problems we've got is, for 30% of branches in America, they were already, financially, compromised. They weren't making money. That's a lot. That's a big percentage. And so the longer we remain in shutdown, the more likely it is that, some of these branch closures that have happened will move from being temporary to permanent, right? And so that's obviously a key issue. The behavioral shift around branches, absolutely. People that have discovered digital, have preferred physical interactions, have preferred face-to-face interactions in the past. They may now be saying, "Look, it's
too
I'm
risky.
afraid
Yeah,
of
it's too
going to the
risky.
branch."
And that's the
Yeah.
behavior, because that's been the shift we've never been able to make happen, right? That's always
Right.
been the carrot and the stick approach on how to get people to make that shift. And now we have an outside element pushing that shift in a way
Absolutely.
that we've never had before.
Yeah.
So
No, I agree with you
go
on
ahead.
that front. Yeah.
Well, so when you look at, like, if you were running a credit union today, and one thing I love about Brett is, unlike a lot of other financial people, he actually understands credit unions. He spoke at all of our events. You heard him talk about he even knows to use the word members, guys, which is pretty cool. So
I actually worked on payroll for a credit union when I was a coder.
Oh, really?
In 1988, that was the first time I worked on
Wow.
technology around a credit union.
So
my association with credit unions goes a way back, actually.
So when you did that, did your wrist hurt a lot from hammering the chisel into the? Because I think that's how they coded in 1988 in COBOL.
We used card
Punch cards.
punch cards.
So going back to that, so if you were in charge of this credit union, you were looking out in the future, and all of a sudden you're getting all this pressure to reopen the branches. You've got record numbers. Everybody on this call has record numbers of digital. They've all seen more digital. Like, for example, and one thing we were trying to figure out that we were talking about, Brett, was, are we seeing a larger amount of the active users all show up at once, or are we seeing the normal active users plus dormant users who weren't counted as part of the active? And I assume kind of how people count the active. It's usually 30 to 60 days. Start to show up. And we were talking about some reporting around that, trying to understand what we were really seeing, because I think that would really help us to predict the future a little bit in that regard.
Well, so here's, if you look more broadly at the US at changing behavior, we've got a massive increase in e-commerce happening right now, and so these are people presumably that would have gone to a retail store before. Yeah. And now, are ordering from Amazon and so forth. And so, Amazon's really going to do very well at this.
Did I ever share with you the study we did? So we did a study with our Innovation Club, and we wanted to find out what the number one predictor of whether or not, when a member first shows up through the door, what would tell us whether they're going to be more of a digital member or more of a branch member. And the purpose of that study was, we were talking about budgeting, because it's always hard to get, we'll spend $2 million on a branch, but we'll fight over $30,000 for something new and digital. And so, you know what the number one predictor was, it turned out, after we did all the work?
No.
Whether they shopped at Walmart or Amazon.
That's great.
If you were a Walmart, it was a 97% certainty that if you were a Walmart over-the-counter regular shopper, that you were going to use the branch that was somewhere nearby or an ATM that was somewhere nearby.
I love those sort of stories. One of my favorites on that front is with Lending Club. Is a single data point that was 90% more accurate at predicting default than credit scores. And that was,
and what was it?
And that's whether you pay your phone bill on time.
There you go. And so it turns out that sometimes there's real simple metrics that you can discover.
Exactly.
So back to you're running the credit union. We've got
what I do.
We got the hair care creditunion.com. You're serving Johnson & Johnson and the major shampoo companies. Obviously they hired you because of your background. And now here you are. I can get Brett crap, so he's okay with that. So
Yeah,
now you're in
I'm
charge.
not bald. This is a solar panel for a love machine, my friend.
So now
Sorry.
you're ready to go.
Is that appropriate on a webinar? I don't know.
Sure, why not? We had a goat attend once, so it's all good. The goat had a lot of good thoughts. So go ahead. Sorry.
No, so look, I think the first thing I would do is say, let's just start looking at outreach for the members. What can we do to help? So the first question would be, go to the members and say, how can we help you moving forward? This sounds really basic stuff, but what are you concerned about? What are you thinking about? That keeps you awake at night, that we need to know about. Get that sort of level of engagement. I think the CUs here should also think about potentially joining something like the Financial Health Network. It's the largest nonprofit. I'm not saying this just because I'm on the board of that organization, but they've done a lot of great work on Americans' financial health, and they understand, the sort of distress points for Americans in respect to their financial health better than probably anyone else in the United States right now. And so that's something for you guys to consider, taking an active membership in the Financial Health Network. And the next piece is, just starting to work up some simple tools for members in terms of how they can, start getting back to some sort of financial, level set. So
I got an idea for a simple one I want to run by you.
Yeah.
Ready? What if the first thing I would want to do in that situation is to turn off anything that was unnecessary. We all have 10,000 things
so forth. Yeah, exactly.
that are connected. Like, I've forgotten that, you signed up for this little service and it's nickeling and diming you to death at $3 and $4.99 a month.
Exactly.
Producing just
I'm an absolute big fan of that. It's like, if you've got that data as a credit union, you've got that data in the bank statement, in the transactional activity of the customer. So yeah, just look at those things where customers, are accumulating expenses of $300-400 a year that is going to mean food for a month. It's that sort of stuff that like I found one recently, this old data recovery thing I put in place, $299 a year.
And it just hits and you go, and then you go, I'll get it next year.
I haven't used it for 3 years.
Yeah.
And so, it was one of those things like, why have I still got this? And then trying to get out of it, trying to unsubscribe from this was a nightmare, So yeah.
Just a list of card on file transactions. Even if you mailed it or put it as a, email and just said, here's all the card on file transactions that you have. If you're worried about money, you may want to stop some of these.
Exactly.
That's just a simple start.
Absolutely.
But that's the kind of thing you're talking about. Like,
absolutely. So, what can you do to give your members some short-term, medium-term relief from the financial stress they'll obviously be feeling from coronavirus, and sort of keep it, so, what are the tools you can do for that? How do you get people saving in a different manner? We talk about behavioral savings at Move, and I'm sure many of you guys are familiar with the work we've done there. But, one of the greatest things that you can do is just figure out what's the right way to message people to help them to save. We found with Movin', and I'm sure this information is going to be invaluable, but it's really, really simple, is the best day of the week and the best time of the day to message someone to get them to put money from their spending account, their discretionary spending account or checking account, into a savings account was Thursday morning between 6 a.m. and 9 a.m. Now, this is over, millions of transactions and millions of different attempts that we made. Now, if you want to know why it's actually comes back to psychology, is that, if it gets to Friday and I message you Friday afternoon and say, hey, you should be saving some money, the weekend's coming up, it's too late. You've already made arrangements with your friends to, well, I was going to say go out to a restaurant, but a bar, but go cycling in the mountains or something, or have a social distancing barbecue. And so you've committed spend, and so your ability at that point to wind back on that is really tricky. So you just say, oh, I'll save some money next week, after I get paid. And so then you've got immediately you've missed that opportunity. Whereas up Thursday morning, it's early enough before you get to the weekend that I'm able to get you to start thinking about, maybe I should put some money aside before the weekend comes. And that's a pretty significant change. So
yeah, it makes sense. I mean, but it's funny how the psychology.
Simple psychology, but really important to sort of think about those things. So, there's the sort of behavioral component. But if you think about that actually is a much closer, from a credit union perspective. That sort of approach is what you'd actually expect from credit unions, more than you'd obviously expect from traditional banks, right?
Well, and we've already seen, just in this call, this is the 12th one of these, Brett, believe it or not. And we've seen amazing things. Like I was telling you on the call yesterday or last week that one of the credit unions, when the accounts were closed for the stimulus checks, rather than send the stimulus checks back, tracked down the members and said, hey, do you want to reopen this? We don't want to send it back because we're worried it will go into a void.
Yeah.
And he's on this call. I mean, we've seen that sort of behavior already. But, one thing, just as I look at this, and you were talking about Z and V and W-shaped recoveries. This is a great article that just came out, the post-COVID economic recovery that was out there from, from the Hudson Center. And it talks about these Z-shaped and V-shaped recoveries. My question to you is, do you think that the organizations have to make a bet at this point? Like, because I think that the sense is we hang back, but is there some precipice that we're approaching where that becomes a too risky of a behavior and you've got to sort of, draw a line in the sand or plant a flag?
Well, on the engagement stuff that I'm talking about, if you look at what Jill Castillo Edmonds has done, for example, Citizens Bank of Edmonds, rather, they've got their staff ringing everybody that has applied for a PPP on a daily basis until the loan is sorted. So there's things that you can do that don't actually cost a lot of money, but show you real commitment to customers during this time. And so on the digital engagement stuff, to be honest, this, like Jim said, we've got 10 years worth of digitization happening in the space of a very short period of time. And so when you talk about digital member engagement, frankly, this is something that we should have been working on the last 10 years, and we haven't, because there's always been this view that, well, we already have a mechanism for that. It's the branch, and so,
right.
So now is the time, to invest in these sorts of things and make a renewed commitment to the members. And ultimately, it's about our biases more than it is member support. Our bias may be, hey, we can give better member support to a member in the branch, but that's our bias. That's not necessarily, true. Amazon would argue they could give just as good service to customers as Walmart can in a store. And obviously, from your previous research, there's an element of truth to that based on the support. So we now need to start thinking like that as credit unions, is that let's give members the choice, and this has shown us that we can run the business day to day through digital. But now it's not just about digital. It's like, what do credit unions have in terms of their approach that we're not going to see out of the other banks? And that's that commitment, I keep coming back to it, that commitment to member service excellence that we've got to start transferring into the digital sphere.
But that's also one of our biggest Achilles heel, right? Yeah. Because we have this commitment to service excellence, we are risk-phobic in terms of digital services. Like, we let perfect be the enemy of good so often. So one of the things I've been noticing, and I wanted to see if you're seeing the same thing as a fellow banking guy, is that I believe that the community at large is much more much more accepting of these new services that don't, than they were before if they didn't work right out of the right out of the gate. Like you could probably enact a lot more new services now and not have near as much sort of pushback from the community because they recognize you're doing this on a in a tense situation.
I think so. I think that probably would have been the case beforehand, right?
I
don't
agree,
think.
but that's
Yeah.
something that we've all we've experienced. I mean, Jonathan, I know you and I have lived through this of, hey, until we get this 1,000,000%, this 100% thing that we're addicted to, because we don't even want one complaint. But the reality is that digital, there's no way to make everybody happy all the time.
Well,
And
I think that's where it comes back to the dialogue, right? Talk to talk to your members, see what
yeah,
they need,
yeah,
see what's most pressing for them, and sort of prioritize around that. So, I think it's just, I think if you said to members, hey, listen, we had member feedback on this. We're going to give it a try. We don't know if it'll work, but let's, we're going to do this. I can't imagine anyone would push back on that, right?
yeah. So I want to just, what I planned on here was just to kind of exactly the chat we have. And now what I want to do is if anybody has any questions for Brett, if you're interested, and I'm going to force a couple people to ask a few questions to break the ice because I just do that. But yeah, go ahead and hit Melissa up and she'll let me know who's next and we'll try to, get somebody on board. But I'll start off with Tom because I'd like you to know Tom. He's the one that had done, hopefully he's still on, but he's the one that had chased down the members and has done all kinds of things like the tulips. He found a tulip farm that he sent tulips to all the members. He's just done a lot of really cool stuff. Oh. Tom, are you there?
Hey, John. Yeah, I'm here.
There he is. Tom, Brett King,
Hey,
Tom O'Shea. Longtime friends, both of you.
I got to say, I'm a fan, not only a fan of yours, but a disciple. Our credit union fully embraced the digital model about 5 years ago. And at that point, we had already retrained our members, closed all of our branches, digitized our services, and are constantly evolving our business approach. We're looking at our product set now from a delivery, what products are best to deliver. But one of the things that I'd like you to address would be, my fear is that most credit unions are going to fall back to the familiar and say, all right, let's open the branches. But when you take a lot of the changes that are happening in other industries, from crowding and social distancing, those easily could be applied to a credit union branch office where people aren't being permitted to be crowded in. I go to my colleagues' offices and on a Friday afternoon, and there are lines of people with their paycheck to deposit the check and maybe get $20 back. But so I'm concerned they're going to go back to that, and they're going to see the need for digital, but they're not going to have the resources. We're a small industry. They're not going to have the resources to invest in the digital because that's a constantly evolving and fine-tuning and tweaking. So they're going to shortchange the digital, and they're also not going to address the issue of the branches because it's just familiar and comfortable.
Well, I've always said, and Tom, you probably heard me say this at CU conferences and stuff in the past, that I think the natural way to approach that is CUs getting together through associations like Q's and others, and figuring out a way to invest together, and making that sort of that, not that commitment, but spreading the burden of that digital investment and the lack of digital resources, spreading that amongst the different credit unions. That would be, but that's going to take some time, obviously, to put together.
Right.
But that's a fairly obvious one for me in respect to sort of getting accessibility to tools that you may not necessarily have yourself, and sort of jointly doing it. There are some emerging alliances like this. Obviously, you've got organizations like John's organizations like Big and so forth. But you've also got organizations like FinTech Forge that's working through the American Banking Association. to sort of create a similar alliances for creating sort of innovation labs and things like that. So there are a few of those starting to come together, but I'm surprised that we haven't seen more of that, in the credit union space through sort of collaboration. So that would be one approach. I think the other approach is, I don't think you should be looking at, big things like core systems replacements, for example, or things like that necessarily. I think you can start with some fairly, small things. Start with, as I said, start with the outreach to customers. Start with, very simple tools that you can co-opt to help people. Look for, if you're community based, look for, get people in the community come and talk about jobs that they need doing. There's a lot of people, a lot of organizations right now, like Walmart and Amazon and so forth. I know the grocery stores that are working in New York City right now, like Peapod and others. They're radically understaffed for just basic things like delivery. And so surfacing those opportunities within the community to members as well, to get them back on their feet if they need a bit of extra work during financial distress. Not necessarily an obvious role for a credit union to play, but I think it's more about, if we look beyond the pure financial platform of the credit union, who else is better placed within the community to say, we will help you financially get through this, and wear this from a financial perspective. And so what does that include? It includes income smoothing, potentially, if your income's volatile as a result of this. It includes getting you access to other job platforms that will help you earn income. It looks at credit utilization, making sure you're only using credit when you really need it and getting the right sort of credit when you need it. Maybe some of that is debt consolidation and smarter ways to manage the debt you've got as well. There's a whole range of things you could think about as being part of sort of the day-to-day financial tool set that on both sides of the equation, on the cash flow in and cash flow outside, where people don't have any tools right now. How they've done it in the past is they know they've got this much salary coming in and they know they've got these bills going out.
They just have to out earn their spend.
Yeah, and so now's time to sort of get smarter about that. And if you look in the community, who would you go to? Well, if you're a small business, you might go to your accountant. And he might give you some help. If you're, mass affluent, you might go to a financial advisor, but they're going to be more talking about your portfolio. There's no real function in the middle for basic day-to-day money management, at least not in a formalized manner. So I think that is where credit unions can be a real partner to their members. And I don't necessarily think it takes a huge amount of effort, especially in the community, where you can bring sort of community partners into the play to augment the business.
Hey,
That's sort of my basic thinking.
Hey, Brett, have you ever seen trymyui.com?
No.
So trymyui.com is a company where they hire, so you take your website or whatever product you have, and they hire these millennials or whoever you target, and basically you go through the website and use it, and they record your experience as you go along.
It's a usability testing site.
Yeah, same thing. But imagine if the credit unions did some of that. What a cool way to communicate,
Yeah. I think that's great. I think look, I think there's a ton of stuff. That like Fiverr, TaskRabbit, linking, getting people to. There's if you read the letter from the Airbnb CEO to his staff today, it's very
I haven't seen that yet.
Informative. You should check it out.
I will.
But as an example, he's talking about the fact that people are going to be not traveling as far when they do start coming back, and there's going to be more need for Airbnb closer to where they live, right? Because they're going to be driving instead of flying to vacation destinations and things like that. And so
you're also maybe less likely to let people stay in your house when they come, but they could stay in a different place. Yeah.
So
Like we have our RV that we've let like some healthcare workers and stuff use, that kind of stuff.
yeah. So there's a lot of that sort of potential additional income stream stuff that I think people will be definitely thinking about.
Brett, in our world, we have these things because of the nature of the business, these consortiums that are either corporates. You may have heard of those. I know you've spoken at corporate events before. I've been there with you. And we have corporates and leagues in the credit union world. What you were describing earlier in terms of the collaborative events around the fintech opportunities, that seems like that's they've been, I think as the world has changed a bit, they've had to look out and try to decide how they're going to continue to provide value add for the credit union space. Tom, you were talking about that earlier, both from especially from a governmental standpoint, but I think even from what Brett just talked about, that's an opportunity as well.
I hope that answered your question, Tom.
Yeah, these are like platform extensions.
Exactly.
Got the platform of the credit union. How do you move from just intermediation to accumulation and support? And same thing with our trade associations. And say, you're more than just government affairs. You need to be all about helping us to thrive in this new world and the thought leadership and aggregator of those types of thought.
Yeah, I agree. So Jonathan, Silly, you there? There he is. I see him. Hang on. I got to find his picture. So Jonathan, what you got for Brett?
So yeah, as we were.
Well, give him a little background about your credit union, by the way. He may not know about it. Just because
sure.
You happen to be close.
We're Hudson Valley Credit Union. We're located headquartered in Poughkeepsie, New York. We span 12 counties up and down the Hudson River, from Westchester and Rockland up to Albany. And that's a recent development. We used to be Hudson Valley Federal Credit Union, where we were a 4-county credit union here in New York. So we've changed the state charter and expanded our county reach here in the past year or so. We're about, just profile-wise, we have about 330,000 members and about 5.6 billion in assets. So, one of our, I will say, and one of the things we're starting to look at, and Brett, you sort of mentioned this as part of your comments earlier with Tom, is we're starting to really think more about digital innovation. We historically have been a very brick and mortar, I guess, focused credit union, more so than a digital focused credit union. And there will always be some brick and mortar focus for us, but I think this in particular, this scenario has forced us to rethink, is that the long-term approach that we're going to necessarily need to have? And so we've been really looking at some of these, I don't know if I want to call them incubators, but, sort of these innovation groups,
hubs and stuff,
hubs, that sort of thing. And one of the ones we're looking at now, in addition, is members development company, and we're looking at should or shouldn't we get involved? And one of the things I've been wondering is I've seen a lot of credit unions that have we've now appointed this we now have a chief innovation officer or something like that, and we haven't necessarily gone there at this point because we're not really sure what that should mean in the grand scheme of the organization. But I was kind of curious to get your thoughts on, what level of value these incubators or hubs bring to the credit unions that participate in them. Is there, in your opinion, a good ROI? And then, if we were to look at our environment and say, okay, we really need to focus more on digital innovation, what are your thoughts on, where that type of staff member and should be focused. What is their role in the grand scheme of things at the credit union? Because I think that's been one of the things we're having a hard time defining, and our executive team is really focused on the dollars and cents and what's that ROI going to look like. So, one of my challenges is really trying to help define what it is that ROI is in terms of innovation and why we need that. Because I'm a big proponent of, we need to start thinking a little more outside the box and advice on how to pursue that with an executive team that thinks a lot like, sort of a nuts and bolts, here's our accounting, here's money coming in, money coming out. How do you quantify that soft value versus the hard, fee income that you're going to generate, next month?
Look, I'm a big believer in the concept that, I'll often, when I hear the question about ROI and digital, I'll say, do you ever ask about the ROI and member experience in a branch? Because, ultimately, that's the sort of view we need to take of this, is that it's just a different way of our, showing our commitment to members, and being conscious of the fact that we can't leverage the old levers that we had. But in terms of the sort of incubator service, incubators and so forth, obviously there are a few of those that I'm fans of that have been reasonably effective. The bigger the incubator tends to be, the more credit union members or clients they have in the mix, I think, the more credible they'll be. The smaller incubators, they may be cheaper, but you do get benefits of size for things like GitHub libraries and things like that you can use that are, there's some obvious benefit to that. And sort of that group learning experience of different innovation strategies and things like that can be used. So I'm a fan of that in general. In terms of the staffing that you've mentioned, if you guys have looked at, so Big Innovation Club is an example of one, obviously you could start with, but in terms of overall commitment to digital, if you guys haven't looked at Bank 4.0, my book that I released in October 2018, chapter 9 of that book talks about essentially the leadership qualities that are needed to be able to solve this problem. And I looked at 3 types of organizations. I looked at the most technical, digitally oriented, financial company in the world, which is Ant Financial, based out of China. They are the largest privately owned company in the world, and by far, by any metric you measure, the most successful fintech in the world. They have raised the most money. They've got the largest deposit product in the world, UE Bao, which sits on top of the Alipay platform. They have the most customers of any bank or financial institution in the world. So by every measure you could use, these guys are phenomenal at this. And so when you look at their leadership team, what do you see? You see every one of their leadership team is a technologist, right? Then you go to, like a solid, let's take a credit union like BCU or Navy Federal Credit Union. These guys, strong technology pedigree. Look at the board, look at the executive team. Lots of technology experience there. Then you go to HSBC, not a single technologist on the board. And so when I look at those different organizations, I say, who's going to make it? Who's going to be able to get through this? It's those that have already sort of got some of their leadership that are technology savvy. Now, you can convert to being a technology guy. Look at Piyush Gupta at DBS in Singapore. Piyush was a traditional banker for many, many years, and he just educated himself dramatically on the technology. He became a real proponent of that internally. So you don't have to be a long-term technologist to become a technologist, but I do think it starts at the top. And I think the CEO should be the head of digital of a credit union. I don't think it should be a chief digital officer. A CDO will operationalize the CEO's digital strategy. That's my view of the world. If you're outsourcing it to a CDO or you're outsourcing it to an incubator, you're still going to have trouble getting there because, as John said before, you'll still come up to that question of, well, we've got all this money deployed in branches. If we do this in digital, we won't be able to do that in the branch. And so you're already recognizing that has to change, but that has to change from the top. And so I'm not suggesting you fire your CEO, by the way, but you know what I mean, right?
Just talk.
Yeah. But that's sort of the start of that conversation. So, when you look at incubators, when you look at hiring a chief digital officer or hiring, people, it's about operationalizing the strategy for the credit union moving forward. And so it's now time for us to start, having, ideally, I don't want to hear of leaders in the CU space that are saying, yeah, we're still not sure, that this is right for us, this digital stuff. I think that, that conversation was appropriate, maybe 5 years ago, definitely 10 years ago, but not anymore. It's just, let's just get it done,
Yeah. It's time to stop discussing it and put together a plan.
Yeah.
I'm gonna have a quick shameless plug for Jonathan. So we have an innovation club. If you haven't checked into it, it's groups of smaller groups, but they all interact together. It's been pretty powerful. One of the big things that's come out of it was CU Ledger and the Member Pass, and also our Alexa product 5 was helped and pushed forward by that. So I do agree that there's a lot in that space. I'm going to switch over to the one last question for you, Brett, and I'm so thankful that you've been so generous with your time. Thank you for joining us for an hour. Hopefully, a lot of good questions, and you got to meet a fan, so you can. I'll send Tom a book, and I'll fake your signature like you asked me to do normally. So Gary Coates from United's Credit Union, which is out in Oregon and in Portland. Gary, you there?
Hey, John. Yeah, good to see you.
Yeah. Gary's actually one of the original founders of Carillion, if you remember the Carillion product, Brett.
I remember, yeah.
Yep. Go ahead, Gary.
Yeah, so on previous calls, we talked about running a report for unemployment members that have recently signed up for unemployment. So I have the results of that report. So they went from 823 ACH unemployment payments in January to 951 in February, when we had really low unemployment. I'm sorry, 951 in March, to 6,579 in April. So our marketing group right now is working on our strategy for how we're going to contact those members to reach out to them to help.
And of those, how many had loans or do you know?
We haven't, that's another good idea. We haven't connected those dots yet, but we will be, I'm sure, as part of the marketing strategy on reaching out to help them.
So that sounds like, Brett, that sounds like the numbers from COVID, right? They start at 2 in February, and then, it's just this massive march, and that's just one credit union.
Well, look, it's pretty evident now that, I don't know if you guys saw the graphic on the New York Times, front page when employment initially spiked, but I think it was the Atlanta Fed predicted, 45 million unemployed before coronavirus is done and dusted. I think that's probably a pretty accurate, guesstimate. That would represent about 25% unemployment for the US. So I think we definitely have to, that's why when I was talking about this before, I was talking about the fact that, we need to have things, like where to find alternative employment, other income opportunities would be a great member service to have. But yeah, John, that's one of those things that
But it's interesting because what he's talking about, where marketing is working on contacting those members, and what you were saying is, hey, one thing we never really established in our digital portfolio was this engagement type piece. We've
Correct.
always had sort of this one-way digital conversation with people. Here's an
Yeah.
offer. Here's this. Here's this. Here's this. But no kind of feedback really other than
before you can start to use digital to help your members, you have to understand what they're going through. You have to understand the problems that they're experiencing, and this data point is one of those great data points.
Yeah, I mean,
that really will help.
Gary's amazing. He's basically a data scientist. He's always coming up with this. What I love is when I come up with numbers like what I just said, like, okay, out of that 6,579, how many have loans? Because that right there is a great predictor of your delinquency coming up for the future here, right?
Yeah.
I remember in 2008, Suncoast, another one of my alma maters, they had to rent an abandoned car dealership to deal with the repos. They had so many that they went out and found a car place and started parking them there to resell them. So,
yeah,
I mean, it's problems. It's these, what does Kevin J. Anderson say? Unintended consequences.
Yeah.
That's how he writes. I mean, that's what this is. So,
I saw, B of A's got a really hard time, in the news recently for some of their actions, and I will say it's well deserved. But one of the issues, for example, is they offered this mortgage holiday, right? And so they said to me, and they said, okay, you've got a choice of a 1, a 2-month, or a 3-month mortgage holiday, right? But on the 4th month, you've got to pay all the payments you missed. And it's like, that's the most craziest thing I've ever heard of, right? Now we have mortgage holiday, in the UK and Australia where I'm from, mortgage holidays are actually quite common. You can have a 6-month break from paying your mortgage, and it just adds this additional 6 months on the end.
It just reorganizes the loan. We do that for cars, but why would you ever how would anyone ever think that's a good idea unless there's something nefarious behind it in terms of the numbers?
Exactly. Yeah. So, that's the sort of thing that I expected to see a ton of in the US, and we just haven't seen it. So,
well, I think they're too busy scrambling to deal with all the new rules and regulations. They haven't had time to think about it. And closing branches and sneeze shields, and you can see Jonathan, he's like vigorously waving his head. So I'm going to stop here. It is time, and I want to be respectful. Brett, thank you so much. You're always welcome, and just really appreciate you taking the time to join us today.
If anyone on the call wants to reach out and ask me any questions that we didn't get to today, connect with me on LinkedIn or Twitter. My Twitter handle is @BrettKing. LinkedIn is Brett King, obviously, and you can also get to me through brettking.com, which is my personal website.
And you can hear all of this regularly on his radio show that is the #1 fintech radio show. Breaking Banks. That's right. So if you
notice I didn't say breaking credit unions.
No, because he's trying to break banks. You told me that. But no, I think this is a lot of the discussion that we have on the show, and so that's why I offered him to come. I hope this was helpful for everyone. I just wanted to get some perspective from someone who's also listening to banks across the world. I think this is a global thing. It's not just a US thing. Mm-hmm. Thank you, everyone. We'll get this posted, and I'll look forward to seeing you again next week. And if you have anything, like Brett said, that you wanted to get to on this one and couldn't, I'm happy to help foster that. You can send it my way. We'll definitely help connect. If you can't find Brett, we can.
And Mike, we will get on to my new book, The Rise of Techno-Socialism, when we can, right?
Yeah. Look forward to that.
Yeah, that one's really cool. We were talking about the premise of that.
It's a sequel to Augmented. So
okay, cool.
Which, by the way, is now more appropriate than it's ever been.
Yeah,
no doubt.
So, all right, guys. Thank you so much. Take care, everyone.
Thanks, John.
Thank you.
Bye.
Thanks.
Bye now.
Well done, guys.